The CEO of one of the biggest Wall Street firms is standing by with Erik Schatzker, my colleague there in Davos. He is with Citigroup CEO Vikram Pandit. Erik.
Yes, Betty, indeed, a man who needs no introduction. Vikram Pandit, the CEO of Citigroup. Vikram, what a difference a year makes. 1 year ago, you and I were sitting here. Citigroup was just on its way back. Here we are today, Citigroup just having closed out 2010 with a profit of almost $11 billion. It gives you the opportunity to look forward. So I want you to tell me, what is Citigroup going to look like a couple of years from now? And in particular, Citicorp, the part of the business that you're keeping. What kind of changes do you intend on making?
Erik, thank you. It's good to be here with you. And you're right, 2010 was a good year. We earned over $10 billion for the year. And in 2010, our goal was sustainable profitability. And as we move forward, it is now about responsible and sustainable growth. We believe we've got exactly the right strategy, being in 160 countries around the world, with a world that's globalizing, with the emerging market consumer doing better. Our basic strategy is to help our clients. And we're going to help them by giving them access to the emerging markets. We're going to help them by becoming the digital bank and having the cutting-edge technology they need. And, of course, we're going to help them by having some of the best talent in the business. We've got a lot of it, and we're hiring some great people. That's the way we give them good advice.
Vikram, you're plowing money into emerging markets just as many people would say the risks are rising in emerging markets. Inflation is accelerating. Countries like China and others are being forced to take action on that front. And we see riots, for example, in places like Egypt just today. So how do you manage those risks? Are you at all concerned about the commitments that you've decided to make and the risk that perhaps you might have to scale some of them back if these things get out of control?
You know, Erik, we've been in emerging markets in many cases for more than 100 years. We've been through many cycles, and this is a long-term game. And I'll tell you, the development cycle in these emerging markets is pretty strong. Our commitment to the emerging markets is very diversified. We're in Asia, we're in Latin America, we're in Eastern Europe. We're one of the largest Pan-African banks. And so when you put it all together, we're investing against what we think are going to be the next 5 years, the next 10 years. And the reason we're doing it is because American businesses, European businesses are going to have to tap the emerging market consumers that much more. And this is a way in which we can help them. We're almost unique in the sense that we do business in 160 countries. There's hardly anybody better to help them globalize and get into the emerging markets.
Is that to say that some of the skeptics out there are perhaps overplaying the risks in emerging markets?
There is no question that when you look around the world, there are still a lot of imbalances. There are slower economies in the West, and there are some fast-growing economies in some of the emerging markets, but they're dealing with it. And by the way, they are doing as well because it's part of the good news story. They're growing. The consumers are doing well, and they're dealing with it by increasing their supply, investments in infrastructure. And so we are very committed to the long-term growth in the emerging markets, and that's really the kind of growth we think that can help American companies as well.
Well, you are, of course, absolutely right. Emerging markets are growing faster than the developed world. One of the points that I've heard raised here in Davos, in particular from some of your peers, other bank CEOs, is that there's a reason for the slower growth in developed markets, or there's a reason why it's slower than it ought to be, because banks are being overregulated. As a result, they're being forced to hold too much capital. There's too much uncertainty. And as a result of the both, they aren't lending as much as they could, and economic growth is being compromised. Do you share that view?
You know, we've got to sort of step back and appreciate that we can't have the excesses of the form that we had that actually got us into this crisis. And so we've been a very strong proponent of regulatory reform. And good regulatory reform actually makes for safer markets, safer financial system, and better lending. You know that a lot more discussion has to happen, calibration in terms of how much capital, exactly what form, all those things are yet to come. But the lending that we see goes against the kind of demand we see coming from clients. And I will tell you that we are lending more to small businesses, middle-sized businesses. We're lending more to some of the larger businesses. And, of course, we're lending more in the emerging markets as well.
But I want to pin you down on this one, Vikram. Do you disagree, then, that banks are being overregulated?
I would say to you that there is the right kind of regulation that we're going down the path on. And again, the regulation, as far as I see, is completely directed towards making us for a safer financial system, safer banks. there are always possibilities of having crises, but if you do, you want them to be less deep. And by the way, if you do have them, you want to have the system and the structure to deal with them. And so I'm pretty constructive on the direction of all of that. But the question on calibration is still open. There are a lot more decisions that yet need to be made. And I'm sure those decisions are going to be made very mindful of the fact that you need a safe system, but you also need a growing economy.
Vikram, let's talk for a moment about Europe. Do you believe that Europe is, so to speak, out of the woods, that the euro is safe, and that European Monetary Union will hold in its current form?
I've traveled a lot over Europe over the last few months. As a matter of fact, I was just in Germany a couple of weeks ago. I'm here. And I've got to tell you, regardless of who I talk to, the commitment to the euro in Europe is enormous. People see the benefits of that. When you go to Germany, they recognize the benefits of the euro to the European industry and to the German industry, and that's true everywhere. I also believe, by the way, that the Europeans have the wherewithal to deal with this issue. Now, that doesn't mean there isn't going to be some pain. There's been pain. There's going to have to be pain sharing. Different people are going to have to take on different amounts of austerity as a result of some of the changes that may have to come with having the euro be strong, but I'm very constructive on where the euro is going.
Vikram, I need to ask you a question about Citigroup's investment banking business, and in particular within that investment banking business, trading. We saw a lot of weak quarters in sales and trading across Wall Street, but Citigroup certainly wasn't pretty relative to the kinds of numbers that you've been putting up earlier in the year. Does that reflect a decision taken internally to have a smaller sales and trading business, or is that going to bounce back for you?
We did make some very important decisions early on. We were going to be completely client-focused. We're in the market-making business. We're here to put our capital to use on behalf of our clients, and all those changes we have been making. And we've actually been making them for the last 2-3 years. And one of the results of that is our client flows continue to be very strong and very solid, very stable, and we continue to do well. But it is not surprising that different markets are and different quarters are different. And the last particular quarter, not only for us, but for many people out there, represent a quarter that was tougher in terms of making money from market making.
You think this one will be better? First quarter, second quarter?
Well, I'm not going to project what's going to happen in the first quarter.
Does it feel better? Does it feel better?
Well, I am very constructive on the nature of the capital markets. We've seen a lot of good flows. The stock markets continue to do well. There are differences in terms of how the different asset classes are doing, but I see nothing secular out there that would suggest that the capital markets are not going to continue to be relatively robust.
All right, robust capital markets. How about credit quality? It's been one of the big benefits to your bottom line. What does the credit quality improvement story look like in 2011?
Credit quality tracks GDP, unemployment, tracks jobs.
Well, unemployment is still very high. So is that to say that it's unlikely to go down if we don't see any jobs created in the U.S.?
The quality of credit that we're coming into is a lot better than it was a year ago. The trends are improving, whether it's in the cards business or whether it's in the mortgage business. And although it's uneven in some parts of the mortgage business, but generally speaking, the unemployment levels, while high, the employment is stable. Now, we all want more job creation. I think that's going to happen. We are pretty constructive on jobs getting created in 2011. And if that turns out to be the case, I think credit has an opportunity of getting better from here.
All right. Well, we all hope, and I know the president hopes that you're right. Vikram, thank you for joining us here at the World Economic Forum.